Dealing with inherited IRAs can be challenging and complex. If you recently inherited an IRA, or maybe you're just curious about how they work, this video is for you. Today I'm going to go through an actual case where I help someone who inherited an IRA navigate these complex rules to help simplify and make sense of required minimum distributions and their tax implications. Hi, my name is Bene. My goal here is to help guide you with beneficial wealth strategies and insights to deliver better financial outcomes now and for your future. Okay, so I often get many questions around the topic of inherited IRAs. I wanted to go through one specific question because I think it could benefit many who are in similar situations. Now, one thing I just want to point out is that as I go through this case study, you may hear me say the acronym RMD, which stands for Required Minimum Distribution, and RBD, which stands for Required Beginning Date. All right, so here's the question. My father was 79 and passed away in 2020 without taking his IRA RMD for 2020. I inherited the IRA but didn't take any distributions in 2020, 2021, 2022, or 2023, as I was told that I had 10 years to take the money out at any point during that time. Do I need to take any catch-up distributions, or can I just take RMDs each year from now on until the money is used up by the end of year 10? Also, I'm concerned about any penalties due, or if there's anything that I need to file with the IRS because I didn't take the required minimum distributions for 2020, 2021, 2022, and 2023. So that was a question. Let's start to break this down to see where we would go from here. First, we want to look at how old her father was. So her father was 79 when he passed away. So that tells me he was past his required beginning date, or RBD, which is important because that means required minimum distributions, or RMDs, are required. Important to note, if her father passed away before his RBD or had a Roth IRA, there is no annual RMD requirement. However, she mentioned that he passed away in 2020 without taking his RMD for 2020. So is there an issue here? In this case, there is not. And the reason is because of the 2020 CARES Act, which waived RMDs for 2020. So her father didn't have to take his RMD for 2020, and therefore she wouldn't have had to take it after inheriting his IRA in 2020. Now keep in mind, if she inherited it in 2021 with the same fact pattern, she would have had to take her father's 2021 RMD after inheriting it because the 2020 CARES Act only waived RMD requirements for 2020. All right, so let's get back to the question. She also stated she didn't take any distributions for 2021, 2022, and 2023, as she was told she had 10 years to take the money out at any point during that time. This is where it gets a little confusing, and it's in part because the IRS made it confusing. Shocking, I know. So a little history first, just to illustrate this. One of the changes the 2019 Secure Act 1.0 made is that it eliminated one major provision which allowed an individual who inherits a retirement account to stretch out the distributions over their life expectancy. So, for example, prior to the Secure Act 1.0, if I inherited a retirement account, let's say from a parent of mine, essentially, I'd be able to take out a small distribution each and every year over my life expectancy. And stretching out those distributions would also allow me to stretch out the tax that's due on those distributions, because I'm not taking a big lump sum, right? Which then would all be taxable in one given year, all that money. I'm taking out a little bit of money each year, so it's like a slow trickle out of a faucet versus a fire hose, and as a result creates a lot less taxes due. But again, the Secure Act 1.0 eliminated the stretch IRA for certain types of beneficiaries, including non-spouses, which are called designated beneficiaries who aren't eligible designated beneficiaries. So Congress came in and basically said, hey, we need some of this money now. We can't allow people to slowly drain these inherited retirement accounts because, well, they want their tax money now. So they said, we're going to mandate that they distribute them within a 10-year time period, and this is known as the 10-year rule. Well, most experts who interpreted this ruling thought that RMDs wouldn't be required under the new 10-year rule. But then, in March 2021, the IRS revised their ruling, hinting that it would require annual RMDs to be paid in years 1 through 9, and the remaining IRA funds to be paid out in year 10. But then, in a revision in May 2021, the IRS made it clear that annual RMDs weren't required under the 10-year rule after all. But guess what? The IRS flip-flopped back to its earlier position. The technical term for this is the old switcheroo. The final ruling was that the IRS determined that annual RMDs are required in years 1 through 9 if the original account owner was past the required beginning date, and the entire account balance must be emptied by the end of the 10th year after death. Now, thankfully, due to this ongoing confusion, the IRS has waived the penalties for not taking RMDs for 2021, 2022, and 2023. So let's come back to the question now. She said that she was told that she had 10 years to take the money out and could take the money out at any point during that time. However, based on what I just shared, we know that she was given misinformation and that that is incorrect. Because she is a designated beneficiary and isn't considered an eligible designated beneficiary, annual RMDs are required in years 1 through 9 because her father was past his required beginning date, and the entire account must be emptied by the end of the 10th year after death. Now also remember, she was concerned about if there were any penalties due, or if there was anything she needed to file with the IRS because she didn't take the required minimum distributions for 2020, 2021, 2022, and 2023. Well, again, going back to what I said earlier, we know 2020 RMDs were waived because of the CARES Act, so no penalties are due. And because the IRS is ongoing confusion, we know they also waived the penalties for 2021, 2022, and 2023. So she doesn't have to worry about any penalties, and there's no special filing required with the IRS for this period either. There's also no need for catch-up distributions for the missed RMDs in those years, 2020, 2021, 2022, and 2023. However, starting in 2024, annual RMDs must be resumed unless the IRS extends the waiver. So that means as of right now, the ruling states that she will have to begin those RMDs in 2024. And it's crucial to remember that her entire inherited IRA must be fully distributed by 2030, which is the end of that 10-year period. So she'll have to start those RMDs in 2024 and then fully distribute that inherited IRA by 2030. All right, so wrapping this all up, while the rules around inherited IRAs and RMDs can seem daunting, staying informed and understanding the specific circumstances of your inheritance will get you through the process, and it will make it easier to unwind to develop the proper strategy. It's also important to remember that if you have an inherited IRA and are taking RMDs, make sure that the strategy is coordinated with your other assets to properly reduce the overall tax impact and limit unnecessary taxes so you can keep more of your wealth in your pockets and give less back to the IRS. Thanks for watching. I hope this was helpful. Once again, I'm Bene, and if you enjoyed this video, or if there's anyone else that you feel would find value in this, please share this with them. Also, please be sure to like and subscribe if you haven't already, so that you don't miss future videos like this. And if you're interested in seeing how we can provide a plan to help you coordinate all areas of your financial life, to help you reduce your taxes and increase your wealth now and for years to come, feel free to visit our firm's website right in the description, or go to www.stephenbene.com, where you can book a 15 to 30 minute chat to see if we'd be a good fit to partner together, or at the very least, get you answers to your questions to help guide you in the right direction.